Hi everyone, Nathan Robber here. In this video, I want to share with you some stocks that I believe have the real potential to 2 to 5x in the coming years. These are companies that I have carefully selected that have great and growing fundamentals. I've only had one stock that has ever 5x'd before, Robinhood. We're up a crazy 600% on them. I have some other winners in here as well, but I usually know what it takes for a company to really double and triple. They gotta have really good fundamentals, and I've carefully selected all these. Like this first stock we're going over is one that I'm literally about to buy the dip on. I mean, this company, everything about this stock impresses me. And by the way, I will give a quick disclaimer. I'm not an expert. I'm just a college student, so none of this is financial advice. I'm just giving my opinion. And hey, please drop a like on the video for me because I found some stocks I really think you'll love. So this first stock right here is Delcath. And if you look in the top right, the market cap, this is a very, very small company, $394 million market cap. So this one is extremely risky. Just know that. Again, with these kind of positions, you don't want to have a huge chunk of your portfolio in them. Start them out as very small positions, and then if they're a winner like I expect them to be, they will just naturally grow into a bigger position. So let me show you a little more about this stock. So yeah, if you look in the top right, this is nearly a $400 million company, so very small market cap. But here's what I love about this stock, and this is just the growth of them. Obviously, it's a small company, and this is a small number. Only 20 million of revenue in the most recent quarter, but it literally 5x'd. I mean, this is a record amount of revenue for them at this growth rate. What's it going to be this time next year? And not only did they have 19 million of, revenue of top line, but look at the bottom line. They actually made $1 million of net income on that. And that's crazy. That was real money. We can see from the operating profit. They used to lose like 8 to 10 mil a quarter, but now they're actually getting profitable. And, I expect this company's easily in the future going to be making at least $1 million a quarter, and the whole company's worth 400 million. Oh yeah, and that's not even the best part. So remember, the whole company's worth 400 million. They have no debt whatsoever. So this is a completely debt-free company. And check out how much cash that they have. They actually have, look at this. So it's on the left here. They have $58.9 million of cash. So they have $58 million of cash. If you go to their total debt right here, their total debt says zero because they literally just paid off all their debt. They didn't have much debt anyway, only like 10 million, but it's literally zero now. So they've paid off all their debt. They have 68 million of cash. And because of this high interest rate environment, because they have so much cash and no debt, they literally made 600,000 of interest this quarter, just interest on their cash. They used to have to pay negative interest for the debt, but now since they have so much net cash, they're actually making interest on it. Nearly, $1 million just in the most recent quarter. I mean, that's crazy. Now, one thing I will say, you do got to be careful with. They have diluted you, and this is how they've really fortified their balance sheet, and I don't blame them for doing this, but they have diluted you by 31% year over year. So that is something you got to be careful with, but they don't need to dilute the shareholder anymore. They're in a very great spot. The revenue's growing. They're profitable. They have no debt now, 65 million of cash, and the whole company is worth 400 million. So that's literally like 15-20% of the whole market cap is just cash on hand. So that's why I think the risk to reward actually looks pretty decent on a Delcath system. So this isn't the healthcare industry, but yeah, that's one I really like. So this next stock right here is probably more impressive. I mean, this company blows me away. If you look in the top right, the market cap again, $4.5 billion company, not too huge, but still, that's a really good market cap, $4.5 billion. And look at them in the 3 most recent days, or really 4 most recent candles here. They're kind of off their peak. They were at 180 and now they're at 130. And so I'm going to show you why this company is going to be a winner in the long run. This is another extremely growthy company. Look on the right. They made 104 million of revenue and it is up 123% year over year. It's more than doubled. So incredible organic revenue growth. And look at the net income that they made. This is the best part. They made just over 100 million of revenue and 36 million of net income. So look at this net margin. This is ridiculous. A 34% net margin just in the most recent quarter, and the margins keep growing. Look at those year-over-year growth rates. I mean, that's incredible. So this is a company with crazy margins, crazy growth, monster balance sheet. Look at how they just deleveraged from 1 year ago. Like if you look at the asset to liability ratio, it's that orange number. You want it to be as low as possible. It was 84%. Now in the most recent quarter, it's 57% while growing their assets. So that's incredible right here. Yeah, cash from operations is very strong as well. The free cash flow is up 52% year over year. I'll take a little more into their financials for you. So check this out. This company has $89 million of cash on the left there. $89 million of cash. And if we go to their total debt, they literally have total debt of $69 million. So they could pay off all their debt right now, really, if they wanted to. Yeah, look at this diluted normalized DPS. I mean, literally $1 in the most recent quarter. I mean, isn't that crazy? $1 of diluted normalized EPS in the most recent quarter. So yeah, and look at that. They're actually returning money to shareholders through buybacks. It's kind of tough for them to buy back their stock while it's at all-time highs, but they have no net debt, lots of cash, growing like crazy. So this is a fintech. They're in the financials industry, but I really like SEZL. So those are two really high quality stocks with really great fundamentals that I don't really see anyone talk about. So hopefully you can add those to your watch list, maybe buy them on the dip here. But I got another stock I want to share with you, and this is one I own. So those previous two stocks I don't own, I might own them in the future. Like I almost bet like by this time next week, I'm probably gonna have some Delcath stock just because I like them so much. But check out CPRX right here. This is a company you've probably never heard of before. This is another healthcare play, and I do own 25 shares of this stock. They are kind of close to an all-time high, but here's why I think they'll just continue to hit new all-time highs. Look on the left there. Look at the PE ratio. It's very fair. A 13 PE, a 14 forward PE, so really low valuation. And check out the growth here. I mean, this is really good as well. I mean, the revenue's up 43% year over year, so really nice revenue growth. And look at the net income that they made on that. 56 million of net income. If you go to the net margin, 40% net margin. The margin grew by 69% year over year. So this is a company growing their margins. That's why their net income growth rate is outpacing the sales growth rate. This means they're growing their margins. On top of that, look at this fortified balance sheet. I mean, they have no debt. Their assets grow every quarter. They have a record 908 million of cash. Oh yeah, look at the cash from operations as well. Up 88% year over year. Incredible. Well over 200 million a year. So check this out. Yeah, so check this out. The cash is at a record 580 million. So wait, what was the market cap again? We didn't check that. 2.6 billion, and they have 800 million of net cash right now. No way. So like literally over 35% of the market, or no, they have 600 million of cash. Still incredible. But so much of their market cap is literally just their cash on hand. Isn't that ridiculous? And let's see, have they diluted you? Oh, you've been diluted by 2% year over year. No big deal, because the diluted normalized EPS is still at a record 45 cents. I mean, look at that. Incredible growth of their EPS right there. And let's see. Yeah, here's their total long-term debt. Obviously, it's zero. So they have zero debt, $600 million of cash, growing sales 43%, growing margins, growing cash flow. Yeah, what's the cash flow per share? Yeah, look at this right here. So, cash flow per share includes dilution. It's up 82% year over year. This is up 88%. So it doesn't matter. They have diluted you a little bit, but it doesn't matter because the EPS is still growing like crazy. The EPS is more than doubled. Cash flow per share is up 82% year over year. No one's really upset about this. So yeah, I do own this one. I got 24 shares of this company, $2.6 billion market cap. I might be a little biased, but I do really like that one. All right, guys, I got one last stock I want to share with you. And this one isn't a small cap, but this is one I do really want exposure to, especially under $700 a share. So we've all probably heard of this company, Eli Lilly. We all know them, but there's a lot of stuff that I feel like you don't know about, and I want to share that with you. And here's why I think Eli Lilly deserves this high premium. I'd love to buy this stock, like I said, under $700, but check this out right here. They own a bunch of different prescriptions, obviously, and check out this main one right here, Mounjaro. The growth here is unbelievable. It's up 112% year over year to 3.8 billion. They literally created this prescription in 2022. It went from 500 million for the full 2022 year, 500 million of revenue, to for the full year 2024, 11.5 billion. And it's doubled in the most recent quarter. I mean, this is incredible. Nearly 4 billion of revenue just in the most recent quarter. And that's, their main growth engine. And then they also own Zepbound. This is their weight loss prescription. And you won't believe the growth here either. They started this a year ago. Literally, they created, what other company can just create a product and instantly the sales go from 175 million to 2.3 billion? I mean, that is obscene. I mean, that's why this company deserves this expensive valuation, a 64 PE. And the PE ratio is actually a little lower than that because they've had some one-time adjustments. We can tell because if we go to their operating profit right here, look at this. They're making 4 to 6 billion of operating profit a quarter. And there are some weird net income quarters where, like, look, 3 quarters ago, it was only 900 million. So they're having some weird, like, one-time adjustments. So the PE ratio is almost artificially high. It should actually be a lot lower than that. So anyway, let's keep going back over here. They own some other prescriptions. Like, how's this one? Verziano. This is, smaller segment, but still 9% of the whole company. Wow. If we go to it on an annual basis, I mean, this is the trend you really want to see. Another huge winner of a product. What about these other ones? Jardiance. Hey, that's the annual growth. It's growing really good. other oncology, Taltz is anyway. I love how diversified that they are. They don't just own one, two, three prescriptions. They have all these different prescriptions right here. So that's really cool. Most of the revenue does come from the US. They manufacture a lot of their stuff in Europe. So 15% of the revenue does come from the EU. But yeah, like I said, this is a company that the PE ratio is a little artificially high right now. And I think investors really know that. But yeah, that was pretty much the video, my friends. I really hope you enjoyed. You also get a nice dividend here. If you would, and this would really mean a lot to me, hit the like button. If you want to download this app I'm on right here, this is called Moomoo. It's my favorite investing app for analysis and all that. If you want to download it, I have an affiliate link in the description. If you deposit $100, we'll both get some free stocks. I think you get like 30 free stocks right now, which is crazy. And I use this app as well. Like if you look in the middle of my screen right here, this is where I keep all my cash. There's no monthly fees like with Robinhood Gold. You got to pay $5 a month to earn the APY, but this one, you don't. So anyway, hope you have a great rest of your day. My name's Nathan Robert. I'll see you guys in the next one.